And here's what's happening in Apple world with the Apple shares today. News of a phase one trade deal late last week helping to boost the stock to an all-time high. It's also up this morning. As you can see, pre-market up about 0.2%. Joining us now with this take on where the company goes in 2020 is Gene Munster, founder and managing partner at Loup Ventures. Do you have a price target in mind for next year for Apple?
Yeah, I think it's 350 to 400. I think what we're seeing here is a shift away from the old way, which I would consider the disconnected way to think about Apple, versus what I think is a more prudent and realistic way. And if I could quickly talk about that, is that those who believe that this is 275 or below group, which is the majority of analysts, I think are disconnected with the reality that hardware businesses, in combination with software businesses, actually are great long-term reliable growth stories. The reason why people have flawed assumptions that this hardware businesses are 1 year away from demise is because what happened 12 years ago with RIM. And that collapse, I think, has really shooken investors to the core. I was talking to a buy-side person on Friday, and they were reminiscing about RIM's shortcomings. So ultimately, as you look at the most important benchmark, and this is where I come down to this, the most important benchmark for success is ultimately GAAP earnings. And Apple produces more GAAP earnings with a hardware and software business combination than the entire FANG combined. If you assume that therefore they should get, let's give it a Facebook-like multiple, which I think is fair market value. That's a 31 multiple, and that would yield a $371 stock. And I recognize that that's out of consensus, but I think that that is realistic, that shares should trade with that multiple.
So it shouldn't just be about the handsets or how many they're selling and all the people who say the reason that you shouldn't be buying into this stock is because the handset sales are coming down or are not as important or have peaked. That doesn't tell the story.
No, it's about GAAP earnings. And we've gotten away from that. But ultimately, and GAAP earnings need to be powered by revenue growth. Mm-hmm. But if you can build a case, if I could build a case that this can grow at, call it 10% revenue growth for the next 5 years and grow earnings at 15%, I think that deserves at least a multiple consistent with its peer group. So maybe the peer groups are overvalued.
Right. So, Gene, earnings are driven by the fact that Apple can charge premium pricing, and there's a mystique to it, which has stuck with the iPhone for a long time. As they expand in hardware, and that becomes more of a driver, you think they can maintain that mystique and continue to charge premium pricing, and that Andrew will continue to pay so much for his,
yes.
Do you think they can continue to do so?
The history, and again, I'm basing this on 12 years of history, is that they can continue to maintain or slightly increase pricing. Now, they're going to play around next year with some of the pricing with 5 different phone models. The first one's going to be a slightly lower price. We don't have the ASPs on the phones anymore, but I think what's most important is that we're shifting away from just our mobile is phone only to different devices, whether it's hearables with AirPods or watch. And Apple's the best company to bring that together, and that should drive some form of a premium pricing.
So the hardware piece, I understand. My question is, as we've been talking a lot about antitrust issues and Elizabeth Warren and others on tech across the board, what risks do you think really Apple faces in terms of its services business, the apps business, to the extent that somebody will say to them, or that they'll even feel pressure to try to get ahead of it, to say, you know what, we can't advantage our own services over other people's services. Maybe instead of taking a 30% cut on some of the Apple Pay product, we're going to take it down. And you're already starting to see that for certain types of people who are layered on top of their service. What you think that ultimately means?
It's a risk.
Yeah.
Service is an important part of the story, as you said, 18% growing at 20%. That's part of one of the reasons why I'm optimistic. If you're going to say what the probability that I think is going to happen, even though it's in a risk, I think it's a low probability that it's ultimately.
Right.
So next stop, $2 trillion.
Yeah. But just come back with me for 1 second on the services piece. I'm with you. I actually think it is a low risk, but I also think that they may have to proactively change some of their own approach to try to head off that risk. And therefore, might take down the ability to grow that services piece as quickly.
Yeah. There may, and around the margins, I mean, if you would take the worst case scenario, which I think just as analysts we need to always kind of think about all the cases here, that could diminish some of that services growth. Again, I think it's unlikely, but I don't think it changes the underlying core. Is that the core message is
no cars, no TVs, no nothing, just still the same stuff. That's pretty amazing.
Well,
and $2 trillion valuation eventually. You see.
Well, just quickly on the same stuff is just think about watch here. They don't break it up, but you can kind of back into the numbers. It's about 3% of total iPhone owners own a watch.
It's like stealth, same stuff. That's the thing. It's like it looks like it's the same stuff, but it's really not the same stuff.
Never did buy Tesla.
Well,
never did buy
earpods, all the rest of the stuff.
That's the magic of it.
But it's all sort of incremental. And it's.
I do have one ask for investors because being an analyst for a long time covering this. One ask is why do we continue to obsess about this as simply a hardware company that should trade in a historical range of hardware companies? Why can't we think a little bit bigger about this in the context of this should grow at, call it 10%?
Had that multiple forever.
But that doesn't mean, that flawed assumption, with all due respect, doesn't mean that flawed view, it doesn't mean that assumption is true, that it should always trade at that.
So I want to go back
to
Andrew.
All this stuff, the additional stuff that you bring into it just locks you into the ecosystem. It makes it so that you're never buying a different phone. I'm completely locked in.
Yeah, there's 900 million people that are locked, and that's growing despite the fact that iPhone sales dipped about 10% this year. It still grew that base.